Today, we are examining one of the most straightforward swing trading strategies available. I have conducted research and backtesting for you, and I have truly selected the optimal choice, which is particularly well suited for beginners and stands out as the best option. That means you don't need any great prior experience. I will explain to you here in detail how to do what, and above all, how we can avoid mistakes, how we can also add indicators to it. That we make the whole thing a little easier for ourselves, that we don't have to think too much here. That means it's a typical set and forget strategy. This implies that you establish a sell limit buy limit order, where you subsequently indicate that you wish to buy or sell at a specific price. There you place your order, and that's how the strategy is built. But I would say, let's start right now with the video. As mentioned, today we're examining a swing trading, day trading strategy, depending on how you want to label it. We are definitely in the 4-hour chart. That means you can also check and verify this in other time frames. It works very, very well there too. I have conducted a backtest of the entire process for you in the 4-hour chart, as I believe it performs optimally in that time frame, and you will certainly have 1, 2, or 3 trades per week, which is a substantial number for a swing trading strategy. So, what are we looking for here in the 4-hour chart? It's nice to see these bars, but we don't really know what to do. We are searching for liquidity sweeps. What does all of this imply? If we glance down here, we can observe wicks indicating a downward direction. Everywhere there are wicks pointing downwards, and now we really pay close attention to the fact that here on the left side there is a wick pointing downwards, and then on the right side here we have another wick, which kind of takes it out. What does that mean now? It means that here at the front on the left side, people have opened long positions in this area and then placed their stop loss below the last low on the left side here. That means there are a lot of stop loss orders placed in this area because people want to go long on the whole. Maybe you are familiar with the sensation when you make a purchase somewhere, then you get stopped out, and later on it moves in your favor. This is such a typical liquidity sweep. That means people are being taken out here with their stop loss orders, and this point here, I'll mark the whole thing as dollar for liquidity. That means individuals have now all been removed from the chart, and then it proceeds towards long. That is our initial step. This is what we need. This is what we mainly wait for. That means we don't want to enter any trade beforehand. First, we desire the liquidity to be removed from the market. Therefore, we assume that everything has been successfully resolved. The next step is to analyze the chart and carefully observe it. At this stage, we require a new high in order to progress further in our process. So let's look over to the left side and see here. Okay, here to the left side, this is not as significant as we want it to be, but this high up here, you can see very clearly that this high up here was built up and then it was completely rejected with a huge candle downwards. Don't worry, we'll soon add an indicator that will simplify the whole thing for us. So believe me, stay tuned, don't switch off just yet. It will get easier, it all sounds more complicated right now. I'll just mark this as a green box here, so we know that in this area, we have formed a new high, right here in this area. So, that's clear for now, right? We've removed the liquidity down below, and we've formed a new high up here. So, what do we need next? We need a pullback. This means it went up here, formed a new high, then comes back down, and from there, we want this movement to continue towards the long chain. That means we want to enter a trade somewhere down here. Now, of course, we don't know exactly where we want to enter. And since we naturally want to automate the whole thing a bit and not think too much and so on, we basically only need these two things. Liquidity and a new high must be formed, and now our Fibonacci comes into play. To understand what this means, watch my videos on my channel. Feel free to check them out. Subscribe for free if you like what you see, and please give this video a thumbs up. Thank you for your support. Let's use the Fibonacci. I have already preset everything for our strategy here. Please adjust it to 0, 0, 7, 0, 5, and 1. These are the regions, but in general, we actually only require the yellow region. That is the specific area where we intend to enter our trade. That means, feel free to set it up like this. I've also removed the background down here, so you can take over everything. Now we have our Fibonacci. That is all well and good. Now we need to plot the entire thing. So, on the left side, we have our low that we formed. We have a new high point up here that we have formed. So we take the Fibonacci sequence from the low point down here, which is the lowest point on the left side, and pull it to the highest point. If the chart continues to move towards long, then we always follow that. We keep moving along, always moving along, to make sure we catch the highest point there. Of course, this all happens from a certain distance. If we should then leave it all, I will provide a more detailed explanation once you should no longer pull it up, when you might want to take a brief pause and perhaps the chart has already shifted in the opposite direction. In general, this would now be our area here. So, okay, the low and the high that we have formed here, I'll gladly mark it for you again, once up there and once down here. So those are our 2 points. Now you can already see down here the nice yellow area, 0.705 Fibonacci, which means we would simply place our long shade there. That means as soon as we have formed a new high up here, we can then draw our Fibonacci and place a buy limit here. We merely place it down here. Buy limit on the yellow line on our Fibonacci sequence. We can also perceive the price here on the left side. That means place a buy limit order. Boom, we just do it without much confirmation. That's the set and forget approach here. That means you just place it there and you don't need to look at the chart anymore. Let it run like that. We then place the stop loss below the last low because the advantage here is that the liquidity to the left side is already depleted. This means the chance of the chart coming down completely here again is very, very low. If it does, then you don't want to be in that trade anymore because then your trading idea here was to continue towards long. Yes, not a good idea. The chart seems to want to continue towards the short side. There's nothing we can do about it. Basically, with this liquidity sweep here on the left side, we can see that people have already been taken out of the market and then we enter the trade. That means we are very, very smart here and trade it all like this. We then take profit up here at the new high. And we'll just leave it completely as it is. Of course, you can also work with a trailing stop here and then let the whole thing move up. But generally, let's just keep it simple for now. We have our liquidity here at the bottom, new high, then Fibonacci, yellow line, just enter the trade and place the stop loss below. Take profit above. Let it run. It's a swing trading day trading strategy. If we look at when we entered the trade here, that was in the evening at 7 p.m. Therefore, it definitely makes sense to create an account where you don't pay fees overnight. Definitely makes sense. And if you want to start trading now, I recommend Vantage to you. This is a broker with extremely low fees and also extremely tight spreads. That is precisely what matters the most in the world of trading. There we can also create a swing trading account, for example, with no overnight fees. It's definitely worth it. You can also receive a 50% bonus on your initial deposit there, so please feel free to check out the description of the video. You can find the link there, and if you have any more questions, simply come to our free Telegram group. You can also find the link in the video description, so we'll go in there, and the whole thing would have lasted until Tuesday. And let's just take a quick look until Tuesday. That means from Friday until Tuesday. We might have already entered by Friday or Friday afternoon until Tuesday. Fri, Mon, Tu. 3 days. Then we would have reached our TP up here. In terms of risk ratio, we would have risked $100, for instance, and would have made a profit of $240 at this point in time. Of course, you can also say, okay, I'll only go up to 2 to 1, meaning here, okay, we'll only go up to 2, boom, then we would even be up here in this zone, and then you could say, from there, I'll already close the trade. Of course, everyone can do it in their own way. I backtested the whole thing in a way that we naturally run up to there, but at some point, we also have to break even, meaning at the latest around 2 to 1 or so, we should definitely break even here. So in this region, here would be our take profit. This is merely an illustration. Functions extremely, extremely well when the chart is purely in a trend. That means here we are in an uptrend. Now, this whole thing keeps rising. Now we have the next opportunity immediately. We can discuss that directly once more. So this was a trade we had briefly. What did we have in our trade at this moment? Upon closer examination, we can observe that what we see here is in fact identical to what we see in the lower section. We encountered a liquidity sweep in this specific area, right here in this precise location within this area. That means I'll set that aside for now. In this area, a liquidity sweep. Again, the same principle. So, what did we have after that? We experienced a new high point. Once again, it was based on exactly the same principle. That means we now take our Fibonacci again. We do exactly the same thing again. We take our low, and then we look for the highest high up here. Initially, the high point was formed here. Then it kept moving up, and we drew the Fibonacci along with it to analyze the trend. That means we would have been up here in this area now. This is the highest high that was formed here. It was even retested up here. A liquidity sweep has not occurred up here. That means liquidity is up there. What is very, very good in this area, that means this would now be our Fibonacci, and then you can already see what has happened. The chart reached our Fibonacci level with pinpoint accuracy, right on target, and then retraced back towards a long position as anticipated. That means 2 consecutive signals here that would have worked immediately. Now, of course, we need to look, okay, this is a 4-hour chart. When was this? That was on Thursday, the 2nd of May. So we could have entered a trade here, and this trade where we entered, that was at 26 April. That means, as you can see, you do not have a setup every day in this place. That is why you can also simply examine the entire thing using multiple charts to discover the optimal setup that suits your needs. So that means generally here again exactly the same principle. we are opening a long position here at the bottom. After we had the high up here, we have our limit order here. If you naturally then pull the Fibonacci up as well, then you naturally adjust your limit accordingly, always following the Fibonacci. I believe I do not need to restate that again now. Place stop loss once more, this time below the last low point. Now you might be thinking, why didn't we include this somewhere here? Well, that's just the strategy. You can always optimize it for yourself and say, I've tested the method, and if I only use half of the stop loss, it works very well too. It could be beneficial, so feel free to proceed in the manner you deem appropriate within your chosen currency pair. And then take profit would be up here in this area. And boom, what did he do up here? He also took out the liquidity to the left side here again. Very, very simple, I would say, and that was already the end of this week, which means we have now entered the weekend and could have taken another nice trade here as a profit before the weekend. So it looks like we have 2 trades now. You might say, oh yes, everything is full in the chart now. Of course, you don't have to keep it, you can delete it. But how can we optimize the whole thing now? I will now remove the green one. It doesn't make sense. So I'll also remove the top one here. Let's clean up the chart now because you know what it's about. And now let's try this again here with an indicator that simply helps us there, because currently recognizing all of that, I know as a beginner, is very, very difficult. So you know what we're doing. We'll delete everything again, go through it all again now, but with an indicator to help. So we have to recognize the liquidity sweep. I think you can manage that, so you can definitely do that. So one wig here down, the other one must then be lower if you have liquidity sweep, and then there simply must be power up here. Just like here as well, exactly liquidity sweep and then power back up, and it went nicely towards long again. So let's expeditiously invite the indicator, and this is the only one. Market structure is its name. I'll gladly give it to him again here. Market structure BOS change of character by Nephew Sam. Let's invite him once. And what he shows us is actually quite simple. Break of structure, change of character. You can also set up the whole thing here just like I did. I took out a few things, then you just need to pause the video, and then you can make sure you have it exactly like I do. So just a normal break of structure here or change of character, that will help you a lot. You can also use one from Lux Algo or, as there are many different ones, they all work very, very similarly. What does it do? It shows us here, okay, change of character. It doesn't show the break of structure here at the top, but that's not a problem because a change of character in this area would be sufficient. And with such a bullish candle, that would be enough. Once again, the same principle applies in this situation. We have a liquidity sweep down here in this area. So that is our first point. Then a character change. Then we take Fibonacci. All right, Fibonacci. For character change, let's focus on this high here. Okay, has increased even more. Okay, has increased even more up to there at the very top. So you're basically always trailing it. Then we have our trading here below, and it was successful. The same principle applies here. We have our liquidity sweep in this area below once again. Here we have liquidity. That means we take Fibonacci here at the bottom, then we pull it up. Okay, up to there. Then the chart continued to move upward. So we simply follow along with that. And there would have been our entry point. And again, we would have managed all of this here. That means with this one indicator, you can definitely see very, very well in which direction you can trade all of this. And now, here we come to a final tip on how you can naturally optimize the whole thing, because you will notice that when you backtest the whole thing, sometimes it just doesn't work out. Well, 100% win rate doesn't exist, but we can optimize the whole thing. Specifically, in this area here, we now have an extreme movement towards long. If we now load the indicator here again, then we see, okay, here below change of character towards long. We also had a liquidity sweep downwards, which means we would now take our Fibonacci here, Fibonacci boom, like this, and would draw it higher and higher and higher, and the higher we draw it, the more difficult it becomes to catch up with the movement behind. I would be very cautious in these areas, as we now have another liquidity sweep at the top, and the whole thing could turn in the opposite direction. So take a glance at the complete thing. Here in this area would be it, and here we did not get involved in the trade. If you have something like that, then it doesn't matter. Then you miss the sign. Yes, don't try now to say, yes, here on the left side, I'll go back in there. In this case, it would have worked now. If we zoom out now, you'll see the whole thing would have worked. But honestly, do you really want to enter here? Placing your stop loss all the way down here, which is really far away, and putting your take profit all the way up here and waiting until then, you still won't reach your take profit. Of course, the whole thing would have worked. You need to figure out how you really want to trade, because the whole thing works that way as well. That works, but if you naturally have such a huge stop loss of 64 pips on this currency pair now, then that is already very, very good. If you think about it, we simply had a total of 2 setups here in this particular setup that we traded with profit, and this would be the overall setup once again on a massive scale. Theoretically, you can then make it even bigger and even bigger. I think you know what I'm getting at. Yes, don't overdo it with your size, your trades, your stop losses. Depending on whether you really want to do the whole thing as swing trades, you can of course do so, but I would rather advise against it and would rather say, okay, if we are already in the 4-hour chart, then the whole thing should be completed within a few days with the trade, either take profit or then with the stop loss. And what you will also notice, if you really do it like this now and you have a point down here, you didn't hit it. You see, up here we also have a liquidity sweep. Up here in this area, liquidity was also taken out. Here we have a liquidity sweep followed by a change of character towards short. That means we have a new setup here. This means here again, Fibonacci down to here, all the way down, and you see up here it would have worked now. So this would be more like a setup where I would say, okay, with this stop loss here, I'm fine with it. I'm definitely ready to trade the whole thing like this and trade it a bit lower here. And you see, this would have worked really well here again, so another setup. And I haven't just picked out the best trades here, but you can see that this entire thing works really, really well. And that was merely a range from April 2nd until the present day. Therefore, we already have a complete month included in this backtesting process. And here we already had 1, 2, 3 setups in any case ready to go. And if you then simply distribute the whole thing across multiple currency pairs, you can achieve very, very good results. If you have questions now, or if you're still seeking a mentor who guides you in trading, check the video description. There is my VIP group, and of course also our free Telegram group. We are already a small community. I'd be happy if it continues to grow. Thanks for watching. Don't forget to subscribe and like. See you in the next video. Until then, take care. Bye.